Hello, everyone, and welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. Just want to do a little disclaimer. Nothing said should be construed as financial advice, just my opinions and thoughts on the market. So, yeah, let's get into today's action. So, stock market had a very big day today. And I was talking about the Dow 40,000, and it looks like I wouldn't say breach because I think there needs to be a $1, but it's right around there, and this is probably the breakout. So yeah, I think stock market, the S&P looks like I'm almost convinced it's gonna go to 6,000, like the Elliott Wave statisticians. Remember Avi said it was like 5,400, but it way overshot. So yeah, this is looking of course, as I said earlier this year, it's gonna do well. It's an election year. They're gonna do whatever they can. But the in terms of the gold market, I'm just gonna uh go to gold real quick. And this is the beautiful thing is on Friday there is actual price is only down $3.90, which seemed to be profit taking. Nothing too big. Silver is above 30. And if you actually look at this, the miners, which I'm encouraged at, they're doing well now. And this is up 0.21% right here. Looking at the Huey. If you look at here, Huey Gold Index, that's up 1.27. So yeah, we're seeing if you look at the miners also, just starting from here, this is a 5 year. Just looking at 6 months, 233, all the way up to 300. So I think the Huey's going to get to around 500 when this cycle tops out. GDX, let's see GDX. Look at it. Look at this 6 months. GDX was at 30. Now it's at 38. And let's see, max. You look at it 55. I think that's probably where it will go. 55, 60. That's where I'll get around 50 is when I'll probably start selling. And that's probably where I'll go. So yeah, let's get in the economic data. PPI a little bit higher than expected. And this is the thing. I think inflation's not going to really could potentially not rear its ugly head till later this year, meaning December or even the beginning of next year. Anything that will force the Fed rates, everyone will say, how come inflation went up but the market went down? Because the Fed basically is telegraphed it's going to cut rates. That's why. There's no rate hike threatened. High inflation doesn't threaten rates. That's why. Uh, Now, if inflation starts going up a lot, like the PCE or whatnot, like it did in 2021, then it might do that. But anyway, that's all. Economic data just showing that there will be inflationary threats later in the year. You can see with the PPI, it's not fully gone like they believed it. And let's look at what this says. PPI price index heats up more than expected in June after May dip. And PPI was last month low, so let's see if there's anything. Core PPI, which excludes food and energy, 4%. Prices for final demand services rose. Now, the market also can interpret that as higher demand, so that's better economy. Because you have to remember, they do believe inflation is not bad, just too much inflation. So PPI reminds investor inflation remains a risk, and the Fed hasn't announced its first cut yet. Well, it's all but have. I think it will later this year. 2 steps forward, 1 step back. So that's pretty much what it is. And I'm pretty beat, but let's go into these articles. Just showing how bad the US housing slump deepened this spring. Where does that leave shoppers and sellers? Housing market shows few signs of busting out of its 3-year funk after disappointing spring season amid a gloomy outlook for summer and fall. So yeah, you look at it, not doing well. Look at this. But a small decline in rates may not be enough to entice home shoppers and persuade homeowners it's a good time to sell. Well, yeah, home shoppers. Spring home buying season was a bust again. So there it is. So if we've been following the data, US existing home sales, look at this. 2021 just look at it, just all the way down. Brief dead cat bounce, and now it's on the down. So higher rates deter home buyers. Yeah, that's high prices, not rates. And not enough homes for sale, which is BS. A lot of these are coming. Price isn't right. So yeah, that's the thing. Prices have to come down. And home builders, and to show the prices are down, what states, these states have some of the poorest Americans and the highest home ownership rates. So anyway, they did this. A realtor in West Virginia showed a log cabin home, a 90-acre property, to an interested buyer, and he was shocked by the 420,000 after price. They said I should mark the property up about 300,000. So relatively low listing for a home, nearly 4 million square feet of property. Said, well, it's a Boston shot to a Boston native, not to West Virginia. Here in West Virginia, you can get 90 acres for under $500,000. So yeah, if you look at it, Alabama, the home ownership rate, Alabama, Mississippi, West Virginia, Wyoming. There is Delaware. That's a high. Maine's probably expensive, but if you look at it, Minnesota, that's Vermont does, but South Carolina, lowest New York, California, Massachusetts. And so this goes to show, if you look at it, the higher wages in these areas, states with the lowest home ownership have some of the highest per capita incomes in the nation. So if you look at it, Massachusetts, Hawaii, income rank, now that's Nevada's bad, but California 4, New York 6, Massachusetts 1. But then home ownership rank, West Virginia, income rank 49. Mississippi 50, income rank, home ownership rate 3, Alabama 9, 48. So yeah. So I have a question, who really is rich? If this state has a high ownership rate, but yeah, I'm just going to show you that there's a lot of home ownership rates in these poor areas. Why? Because prices have to come down. Our prices are, and the problem with home sales is not lower rates. They just don't want the narrative to be lower prices because the elites will lose money. And not only that, if you're for capitalism, if you're one of these, especially if you're one of these normie conservatives, if you're really for capitalism, you should be rooting for a home price crash. because all of this was fueled with cheap artificial money, number one. Number two, when there is a severe underclass, stuff like the French Revolution happens. And the thing of free market, free enterprise, and capitalism will not change. Part of capitalism is declining prices and lower prices. So if you're actually for capitalism, the other one, the Bolshevik Revolution, whether that happened, there was a huge underclass, and that's why the Bolsheviks were able to usher the USSR into communism. So if you're actually for capitalism and free markets, you should actually be rooting for a home price crash. So not just and not only that, the majority of Americans would benefit from it now, except for the banks and maybe the older population. But the majority of so anyway, many poor rates states have high rates of home ownership. And that is the thing. Housing prices are too much for what people make in America. And this is a long term. I think the housing market will crash in a couple of years for other reasons, but this is one reason housing will go down because prices are too high. So anyway, that's all I have for today. Hit that like button and subscribe if you haven't. And just another disclaimer, this is not financial advice or anything, just my thoughts on the market. So anyway, I'll see you next video and have a nice weekend.